everyone, a very good evening. Welcome to this truncated edition of the Money Show, if I may call it that, with me, Mubina Kapasi. We did have that news that, in the very near future, we may just be having two telecom players, but nevertheless, we've got your back on any money-related question that you may be having. And today, we want to, put the spotlight on the gig economy, those freelancers, those contractual workers, those workers in the unorganized segment. So I'm not just talking about maybe those part-time content writers, those part-time employees. I'm also talking about the Ola drivers, the Uber drivers. Firstly, their income is variable on a month-to-month basis, and secondly, they do not get any employment benefits. So how exactly can they curate their financial portfolio to ensure that it makes them sail through even on those tough months? There's also some relief coming in from the government because they have come out with the new labor laws of 2019. And that is said to have included even the gig workers, the contractual, the freelance workers. So let's talk about both of these aspects. I have with me right here in the studios Pankaj Mathpal of Optima Money Managers. And I am also joined then by Rituparna Chakraborty, Executive Vice President and co-founder of Teamlease. So good evening, both of you. Thank you so much for joining in. And Pankaj, I'm going to go across to you first. So 1 month is a great month for a gig worker or a freelancer, and then the next thing you know, his or her usual employees have gone off on break and stuff. So, it's a total lull in the next month with not much work to do, and also income falls sometimes close to zero. So as we know, lots of volatility in month-to-month income. What is your first advice on how such individuals should manage their money in a way so that they don't have to worry about the fluctuations in income?
Ubina, see, gig worker does not mean that they have less income than the salaried individual, but only their cash flow is uneven. Means it's not guaranteed that they will get same income every month. So the best thing is that after working for a few months or few years, once they know that what is their average income, so based on that, they should write their household budget. They should decide that how much they should spend every month, as well as how much should be their income, average income. Means if they can open two bank accounts, very simply, one account where they are getting that income from their clients, and second where they draw their salary. So simply from that account where they're getting a lump sum money, they should transfer a fixed amount every month. So for example, if they know the average income is 1 lakh, but sometime it will be 50,000, sometimes maybe more than 1 lakh, sometime it may be zero also. But when they have more income, that time also they are drawing a fix. It means they have surplus amount left in that account. So in this way, they will be able to manage it a fixed salary every month. So it's the best thing that you apply the law of average and work on this, but discipline is required, because what happens when you have more money, that time you don't think about future and you tend to spend more, and then problem arises. So simple thing, write your budget, maintain proper discipline, and draw based on the average how much you think that it will be the average of next few months. So, and more important is that you should have liquidity all the time, because if suppose sometime it happens that on the average also you're not getting that much, in that case if you have liquid assets, it will be helpful for you.
Okay. Talking about that topic of whether these gig workers or these freelancers get more money or less from, a regular employee, Rituparna, is that really the case? I mean, have you really observed that gig workers, get as much as the same money as, a full-time employee? Or is there any difference usually? Because I'm sure a company would want to reward loyalty of sorts, if you could call it that, with their regular full-time employees. Because at the end of the day, that's the person who's going to be with them, for at least the fairly distant future, as opposed to a gig worker.
Yeah, so I guess I completely agree with some of the insights shared by Pankaj that yes, gig workers do not have a fixed salary coming in every month. However, they actually sometimes make a lot more than a regular employee would have, and maybe sometimes they would be earning less. But let's first try and understand why people opt for the gig economy, to be part of the gig economy. because they would want to exercise the option of being able to fluctuate their income or be able to have control over how much they are ready to kind of put themselves out there to earn more or to earn less. In the sense that flexibility is at the heart of what the gig economy essentially represents. And from that perspective, I think having that freedom to be able to manage their time vis-a-vis the how much they can earn is very important. So to put it simply, I think I have seen Ola, Uber, rather let's say Ola, Swiggy, such kind of delivery boys or drivers who can earn in a month as little as let's say 25,000 and also can earn as high as 60,000 a month. So I think it is completely dependent on the number of hours that they are ready to put into the work, how many days in a month that they're making themselves available. Sometimes it's dependent on age, the kind of vocation they have. I've seen college students. I've seen people who are pursuing some other course through correspondence, all kinds of people who are now entering this. And for them, this is sometimes an additional income, and sometimes it's pocket money, and sometimes it's the entire sustenance of their family, which is dependent on this income. So I think that's what's really happening. And interestingly, it is happening to the extent where it has gotten the attention of the government as well now.
Yeah, we'll talk about that in just a bit. And yes, there's no denying, that this economy has sort of given a lot of individuals a good money to earn on the side to sort of supplement their existing income, to amp up their pocket money, to support the family or in any other way. But Pankaj, many a times when you're working in such an unorganized environment, you tend to ignore the fact that you need to ensure you make your money work for you. Now, we on the Money Show often say that, okay, put a part of your salary in an SIP, put a part of it in debt MFs, in equity MFs, so on and so forth. But what happens when you're not getting a fixed amount every month? Like Rituparna said, Uber drivers may earn as less as 25,000 rupees. And then there are months when they earn as much as 60,000 rupees. So there's no stability. So what are the investment options then available for such individuals?
The first thing that not only Uber or Ola, there are many other professions where you're not getting fixed, but you work as a consultant, you get a freelancer, and sometimes these freelancers are drawing more income than the salaried individuals in the same profession. If I give example in media also, if you say a camera person may earn more as a freelancer than the employee, it may happen. So there are many things available. But coming to investment, see, you have to set your financial goals and you have to save for that, you have to invest for this. And if simply, as I said in the beginning itself, you have two accounts, you know that how much is your average income every month and you are spending that much only, irrespective of whether you get more or less. See, suppose you have decided to save 20,000 every month, so you have to save it out of this amount. So if any month you get more, you are spending a fixed amount only, so you will have surplus available for subsequent months. So discipline is required here, and you have to decide that how much you have to spend, how much you have to invest for your future financial goals. Setting goals is very important. Asset allocation is important. As I said that liquidity is required. Therefore, do not take very long-term commitment. Do not invest in very illiquid assets. Sometimes for a salaried individual, they know that they will get fixed income every month. So that is why they invest in some long-term, they take long-term commitment where they can have like SIP, you said, SIP or some other investment as well. But for freelancer, it will be better. Whenever they have money, they park this, they invest like STP instead of SIP, or even a small amount when they know that how much is the average, they can start SIP also, but not very big commitments where if suppose they are not able to fulfill that, then in that case they go for loan, or sometimes suppose a person invests in plot of land or real estate which become difficult to liquidate in case they need some liquidity. So that they have to take care. Otherwise, rest of the things, if they plan well, I don't think there is any difference. Once they know what is average every month they are getting, from that they can plan.
Okay. Now, Rituparna, like you mentioned, the gig economy has become so big that it's attracted the government's attention as well. And the testimony to that is the fact that, this draft labor law code that has been released does, have in its definition terms that would essentially encompass even these contractual workers, gig workers, freelancers. You can take your pick on what you'd like to term them. So what exactly is there in this draft labor law or draft labor code that would provide such gig workers, certain rights that are available only to full-time employees?
Yeah, I think I would like to start by saying that I do believe that the government's attention is kind of premature, given that in California, AB5 is now becoming a reality where gig economy has been a fact of life for the last maybe 15 years. And hence, yes, it's premature. But having said that, yes, Social Security Code, which is one of the 4 codes that the government has come up with, is contemplating to first and foremost providing 4 benefits to the gig workers. I think they're looking at medical benefits for the gig workers and his family members, kind of very similar to the ESIC scheme that works for workers per se. They're also planning to or contemplating a provident fund and old age pension benefits, a gratuity benefit, and also maternity benefit for the female gig workers. I think besides, I personally feel besides the medical benefit, all of them somehow seem to me as an oxymoron to the very concept of gig. And hence, I don't personally see the relevance, or I feel it's premature load bearing. But on the medical benefits side, I think that's one of the most important components that I do feel which sounds encouraging to me. Besides this, I think what the code is talking about is that lump sum contributions can be made by the gig workers directly to the government, quoting their social security number. Also, there may be a contribution from the employer company as well. What's unclear right now is the quantum and what kind of liabilities, and whether it's mandatory, whether it's optional. For that, we'll have to wait to see the specific schemes, and once it gets notified and implemented, we'll have more clarity on this. I'd like to just add something. From what I gather, that Social Security Code, along with the Industrial Code, has been referred to the Standing Committee as on date, and hence we don't know whether the way the first draft came out, would stand into the future or not. But from what I can summarize, that's essentially what it's talking about. I mean, it also is covering a little bit on the rights of the gig workers. It's also, I think pretty much this is the summation of what's there in the Social Security.
Rituparna, Laura saying that this entire unorganized sector, if we could call it that, is so big that it cannot be put and clubbed into the same as, a labor law, which is there for even the organized sector, wherein, you have employees on your payroll. And hence, even though right now this draft code does have mention of the gig economy, it's not really encompassing all the problems that gig economy workers are facing. You mentioned a couple, right? I mean, yes, it does have those maternity benefits, etc. But still, a lot of gig economy workers have been complaining that, all of their problems have not found a solution in this draft labor code. Is this something that you would agree with?
I think what's very important to understand is the concept of gig. If a person and an individual is making a choice to be part of the gig economy, I think they need to understand how they are differentiated as against any other regular worker. Now, let me just explain to you that, and not just in India, I think I've studied laws across the world, and I've realized that the definition of a gig worker is that it's essentially a relationship between an enterprise and an independent worker, and the relationship is bound by a contract for service, as against a regular worker where an employer and employee relationship or a master-servant relationship is bound together by a contract of service. So by definition, they are not workmen, which means by definition, they are offering a service, and hence the expectation that they will be treated equivalent, essentially it's of course it's high risk, high flexibility, but it's also high yielding. in terms of remuneration, in terms of what you earn out of it. And hence, if one can't have the upside of being able to take up their income, which is almost sometimes for similar job roles twice, thrice that of a regular employee, as well as have the other side where one wants to be treated like a worker. I think gig brings in a lot of flexibility, not just for employer organization or user enterprises. It brings in immense amount of flexibility for the individual who's offering themselves as an independent contractor or subcontractor or service provider. So I think while I understand those sentiments and I know where it stems from, but I think it's counterproductive. I personally believe that having a comprehensive health or a medical benefits is what probably is what one should expect or one should invest in, and everything else, I think it should be the prerogative of the individual. I think there are enough and more examples of gig workers in the economy who are doing that successfully. And some of the professions that Pankaj mentions are just so right. I mean, there are lawyers, there are chartered accountants, there are media writers, there are artists, there are designers. I mean, they thrive on this concept. And hence, one should probably not look at one side and some of the vocal voices which are coming around this. And because I feel that would be prematurely killing prospects of many others who are benefiting because of something like this exists. The moment one tries to make this equivalent to a regular employment, which is already happening in California as we speak today, will disappear. I mean, since 1st of September, when this entire regulation AB5 came into place and when it actually got implemented on 1st Jan, I think employers and public policy makers have seen what has happened to some of those gig jobs which earlier existed. So we have to be very cautious about this.
Okay, all right, Rituparna, thanks so much then for joining in, talking about what the draft labor code has in store for the gig economy workers. And I hope that's helped all of our, freelancers watching out there understand what their rights could be, once this draft law is passed. I think it's expected towards the second half of the budget session. But, Pankaj, like we said, at least at this point, till the new labor code is not passed, gig workers don't exactly have insurance, provident fund benefits, etc. More importantly, that Mediclaim cover, that group Mediclaim cover, I think that is something that a lot of our salaried people take for granted. So do you think that insurance is an extremely important component that, these gig workers should take for themselves?
Yes, Mubina, I agree with you because employer benefits are not available for the gig workers. So they should plan themselves. Like you mentioned, health insurance is very important. Which is first priority should be there in their financial planning, and followed by then life insurance also, because though it is applicable for whether salaried or gig workers, but here we're discussing about that. So life insurance when the family members are financially dependent, but they should go for term insurance and then plan for their future financial goals. So like you have PF when you are employee, and which is not available here for the gig workers. So they should more focus on the retirement as well, that they should plan in advance whether they should invest in NPS or they can make a retirement corpus by investing in mutual funds or whatever it is, or PPF is another choice available with them, but they should plan for their retirement, which is not available like a retirement, like an employee where they have PF contribution, where they have contribution NPS, etc. Here they have to invest themselves. And Mediclaim is definitely very, very important thing. They should plan.
All right. So, folks, you need a Mediclaim, a plain vanilla term insurance is extremely important. And when it comes to investing your money, don't go for some very long-term commitment, illiquid, instruments like real estate or something like that. SIP is a very good idea. And if you have any extra money, just park it in a liquid fund. That's how you can invest and manage your money. We will take a very short break. But when we come back, we're going to be talking about spending money, budgeting money for these gig workers with Pankaj Mathpal. Don't go anywhere.